Hey guys, welcome back to the channel. In this video, we're going to be covering why investing in AI ETFs might be the smartest decision for 2025. I'm also going to provide, some research and articles that are supporting the case for investing in AI, as well as sharing, a couple different ETFs that you could consider for your portfolio. So without further ado, guys, let's dive in. Okay, the first article that's going to come up is going to be from Perkins and Coie, which is an international law firm. And this was written December 5th, 2024. Basically, what to expect from the Trump administration on AI policy. And I've already highlighted this stuff so you can kind of look it over. If you want the full articles, I'll put the link down below in the description for you guys. But essentially, the views of Trump's transition team were very positive. President-elect Trump's transition team has selected Michael Kratsios and Gail Slater as co-chairs of tech policy during the transition. During the Biden administration, Kratsios has been serving as a general advisor at Scale AI, an AI startup that supports the defense sector. His return indicates Trump's administration team holds a continued interest in AI. All right, we also have Gail Slater, who previously served as an economic policy advisor, and she's been advocating for less regulation on the AI industry. Both of these people, having them as part of the team, should prove favorable for AI in the future, okay? Since there's a strong interest in AI and interest in AI related to national security. All right, so moving on, this also struck out, to me because remember, this was written back in December, and last week, China had released their version of an AI called DeepSeek. And this obviously riled the markets. Last week we had a huge tech sell-off that affected pretty much everybody, but essentially what, this is telling us right here, under President Biden, export controls to China have been repeatedly tightened on AI semiconductor chips. We're basically trying to maintain an edge over China, maintain that American AI dominance. Given that President-elect Trump has advocated for taking a hard line against China in matters of trade, proposing significant tariffs against products manufactured in China, we can expect the next administration to build upon current controls and seek significant protection measures to deter the sale of sophisticated AI technologies to China. All right, so keeping this in mind, again, with the advent of DeepSeek coming out onto the market and, a lot of people basically saying it's blowing away, ChatGPT, Gemini, and everyone else because it was cheaper to make. It looks like they didn't really need all that, even with all these semiconductors, the hardware, and the technology not being exported to China, China was still able to come out with an AI. Okay, so again, this is a very big deal. And then here's another article from Covington, which specializes in technology and legal counsel. And inside of their blog, they have this blog called Inside Global Tech, and they published an article December 18th saying U.S. AI policy expectations in the Trump administration, GOP Congress, and the states. And again, this will be linked down below in the description for you guys. But the net of this is, like the first Trump administration, the second Trump administration is likely to prioritize AI innovation, research and development, national security uses of AI, and U.S. private sector investment and leadership in AI. Although recent AI model testing and reporting requirements established by the Biden administration may be halted or revoked, efforts to promote private sector innovation and competition with China are expected to continue. All right, so very big deal here. That means, they're going to lift a lot of the regulation that the Biden administration had placed, and they're basically going to make it easier for AI companies to innovate and continue growing and expanding their footprint. So again, this is a big deal. All right, and then very recently, January 21st, 2025, OpenAI, which is a creator of ChatGPT, they announced the Stargate project. Okay, this was a big one. The Stargate project is a new company which intends to invest $500 billion over the next 4 years building new AI infrastructure for OpenAI in the United States. ARM, Microsoft, NVIDIA, Oracle, and OpenAI are the key initial technology partners. As part of the Stargate project, Oracle, NVIDIA, and OpenAI will closely collaborate to build and operate the computing system that they're going to build. And then this also builds on the existing relationship with Microsoft. Okay, so OpenAI is going to be using Microsoft's Azure cloud platform to build out this, huge AI infrastructure. All right, and this was, updated January 31st, 2025. All right, again, all these will be linked down below in the description. Also, to add to the favorable conditions for investing in AI and to add to the bull case of investing in AI, there was a blurb under President Trump's, I forget what he calls this, the 2024 GOP platform Make America Great Again plan. This is available on his campaign website. But on page 9, under chapter 3, Build the Greatest Economy in History, he has listed champion innovation. Okay. And he lists both crypto and artificial intelligence. Okay. As well as, expanding freedom, prosperity, and safety in space. But what we care about, really, aside from the crypto piece, is artificial intelligence. They're going to repeal Joe Biden's dangerous executive order that hinders AI innovation and yada, yada, yada. In its place, Republicans support AI development rooted in free speech and human flourishing. So again, even in his own, campaign trail, campaign promises, campaign document, he is listing AI. All right. So now we know that behind the economy, behind everything, that our current administration supports AI, which is really good. They're not going to make it hard for these AI companies to innovate. They're actually going to let them innovate, pretty freely. And this is obviously going to be a good tailwind for investors who are investing in AI. So how can you, as an investor, take advantage of this, time? How can you take advantage of this? How can you get, a piece of this AI pie? Well, I'm going to share with you a couple different ETFs that are AI specific. The first one is going to be from Global X. This is the Artificial Intelligence and Technology ETF, ticker AIQ. All right. Here's some reasons to consider AIQ. First is the high growth potential. Artificial intelligence market is projected to reach $184 billion in 2024, which we already passed, with the market size expected to grow to $826 billion by 2030. All right, huge. That is a big leap. Okay, forecasts indicate that over 729 million individuals will use AI tools by 2030. And then for this specific ETF, they're taking an unconstrained approach, meaning that they're going to be investing regardless of geography or sector. Okay, this is a big important piece right here, regardless of sector or geography, because there are other companies besides just tech firms that are innovating with AI. There's healthcare services, financial services, there's agriculture, there's all these other different services out there that are using AI to make their product or service much more efficient, much more better. All right, so let's take a look at the ETF. So we see this ETF came about in 2018, so it does have a fairly decent track record. It's been around for about 6 or 7 years. Expense ratio is 68 basis points or 0.68%. Now, personally, that is kind of high, relatively speaking. But again, let's keep looking under the hood and seeing what this ETF is all about. All right, it does have a very healthy investment at $3.26 billion. All right, this is important, knowing how much assets are under management, or AUM, because it tells you as an investor how much money is actually tied up in this ETF. So having $3.26 billion tied up in this ETF tells me that it's a very healthy ETF, and a lot of investors are putting their money into this ETF. Okay, we see that it also has 68 holdings. Okay, 86 holdings, excuse me. Has 86 holdings, so 86 different companies. So whenever you put, $100 into this ETF, it's going to get spread around 86 different companies. So very good. So quick summary. The Global X Artificial Intelligence and Technology ETF seeks to invest in companies that potentially stand to benefit from the further development and utilization of artificial intelligence, AI, in their products and services, as well as companies that provide hardware facilitating the use of AI for the analysis of big data. All right, just taking a further look down, we can see the exposure. So we could see the sector, 66% to technology, consumer discretionary is 13%, communication is 10. So again, this is pretty healthy, diversification. Then we have industry, software services, semiconductors. So again, looking at these different weightings, I would say this is pretty healthy. You want to be primarily in software and services because this is where AI is being developed. This is where AI is being implemented. All right, as far as country, 70% to America. And then you have 8% to China. All right, this is important because, again, diversification is the only free lunch that you're ever going to get in investing. But, when you want to invest in an ETF like this, the good thing is that you're going to get exposure to other markets. So to China, Ireland, Canada, Germany, and South Korea, Japan, etc. You're going to get exposure to those other countries, but a primary bulk of their holdings is going to be in the United States, which is a good thing. All right. So if we scroll up, we can see what their top 10 holdings are. And these are names that you're probably really familiar with. You have Meta or Facebook. They placed Accenture pretty high. You have Apple, Tencent Holdings, Alphabet or Google.com. You have Salesforce, Amazon, Netflix, Tesla. And I'm sure Nvidia is in here somewhere. But, you can look at the percentage, right? Over here for net asset percentages. They have a pretty healthy amount to Facebook and a pretty healthy amount to Accenture, right? So these holdings right here are all having something to do with AI. You have the metaverse that is being produced by Meta. You have Apple; they're working on their own AI, right, for cell phones and all their other mobile devices. You have Alphabet or Google. They have their Gemini AI. Amazon, they have their AWS platform. That's they're also building some type of AI in the background as well. And then you have Tesla, right? They do robotics and AI. So a lot of different companies in this ETF. All right, a lot of different companies, which is a good thing. All right, Tencent Holdings is from Hong Kong or from China. So again, they want to be, this is ETF is holding a diversified basket of different stocks. So that's pretty good. All right, so moving on, we can see that the Global X Artificial Intelligence and Technology ETF over the last 5 years has returned 110%. All right, so we're going to use this number to compare it to the other ETFs and just see how they've done. But remember, keep this in the back of your head. All right, 110% over the last 5 years. Not too bad. That is definitely not too bad. Okay, moving on, we have the iShares US Tech Independence Focused ETF. This ETF focuses on US tech companies only. They do not invest outside of the United States. This ticker is IETC. It has a very low expense ratio, very, very low expense ratio of only 18 basis points or 0.18%. All right, so this would definitely be a top contender to have in your portfolio if you're worried about fees and expense ratios. All right, so why would you choose IETC? Well, you get access to tech stocks focused on US tech independence. All right, so you're not going to find any stocks from Hong Kong in here or any stocks from China in here. All right, as we scroll down, we see that they have $456 million in assets under management. So that's really, really big. Not as much as the $3.2 billion that Global X has, but this is still a very healthy amount at 456 million. So that's still a lot. This fund came out around 2018. So again, around the same time as Global X. So you just want to keep that in the back of your mind. This ETF does have a decent track record. It's been around for a while. If we scroll down, we see it has 120 different holdings, which is a big deal. Again, when we talk about diversification, and all these companies are based in the United States versus Global X, which only has 86. And, they're kind of spread around the whole world. So continuing down, we can see the top 10 holdings they have. So they have Broadcom, they have Amazon, Nvidia, Microsoft, Palantir, Salesforce, Accenture, Apple, Oracle, and some of these companies are the same companies that are helping to develop the Stargate project. So, if you want to get exposure to that project and get a piece of that pie, these ETFs, as long as they have some of those holdings in their ETF basket, you're going to be able to get a piece of that, right? You'll be able to take advantage of that Stargate project. All right, so again, we can look at the sector diversification. A lot of it is in software and services, as it should be, semiconductors and semiconductor equipment. So that's more so the hardware that's going to be used for AIs and, chips and things like that. Then tech and hardware equipment, consumer discretionary, and all the way down. So this is not a bad fund. This is definitely a top contender, in my opinion, if you wanted to invest in, an ETF that's more tech specific, but not only that, but tech specific in the United States. This would definitely be something worthwhile. We can see that over the last 5 years, this ETF has returned 144%. Okay, 144% over the same 5-year period versus AIQ, which only returned 110. All right, so again, this is more of a U.S. tech-focused ETF. So if you're bullish on the United States and bullish on the U.S. economy, then this would be the ETF to go with. All right, finally, we have VGT, all right, which is the Vanguard Information Technology ETF, an expense ratio of a whopping 0.9%, all right, 9 basis points. This is half of IETC. All right, let's take a look at the fund. All right, so the inception date it has been around since 2004, so, it's got a very long track record, a decade's worth of performance that we can look at. All right, and scrolling down just a little bit more, we can see that it has 316 holdings. That is wild. 316 holdings as of the making of this video. And it has $99.5 billion in assets under management. Okay, that's more than IETC, and that's more than the Global X AIQ. So this is a very impressive, large ETF with a lot of investment. All right, so something to think about. It's just a data point. And then here you can see what their weighting is. They have application software, communication equipment, electronics, all the way down. Semiconductors making up almost 30% of their portfolio. Then you have system software basically, making up almost 20%. And then technology, hardware, and storage making up almost 20% as well. So again, the 4 biggest pieces of this ETF is going to be application software, semiconductors, things like NVIDIA, to name a few, or to name one. And then you have software systems, Apple, Microsoft, those types of softwares. Technology, hardware, and storage peripherals. So this is going to be your storage providers or your companies that develop hard drives and the next generation storage devices. So we can see the top 10 holdings here. We have Apple, NVIDIA, Microsoft, Broadcom, Salesforce, Oracle, Cisco, Accenture, and ServiceNow and IBM. Okay, but let's look at the very top 3. All right. The top 3 holdings make up almost 45% of this fund. All right, almost 45% of this fund. You have Apple, NVIDIA, and Microsoft. All right, so again, you want to just be aware of that, because if one of these or 2 of these companies go down in value substantially, then the ETF is obviously going to feel that. All right, so as far as comfort level, I would say I'm pretty comfortable with that as an investor. And again, you're taking advantage of the AI thesis of the Project Stargate, and NVIDIA and Microsoft are listed as the 2 top holdings in there, as well as Oracle, right, which is coming down at a 1.66% percentage of the fund. So again, these ETFs, very, very good contenders to add to your portfolio. But I'm going to share with you one other ETF in case you want to invest in AI, but you want to make money on them. All right. So traditionally, technology-focused ETFs, technology-focused companies, they don't really pay out dividends, because what they do is they use that money to reinvest back into the company so they can research, or reinvest back into research and development, of their services or software suites. So they don't really pay out dividends, right? This is how they grow their companies. This is how the shares become, more valuable, because they're just constantly researching and developing new services. So let's say you wanted to make some income. Well, there is an ETF. Oh, before I get there, let me go back. So VGT over 5 years, over the same time span, has returned 132%. Okay, 132% versus IETC's 144%, and versus AI or Global X's AIQ. All right, so very, very good. All these ETFs are very good, but you have to really decide which one makes the most sense for you. VGT has broad diversification, low expense ratio, whereas IETC, is going to be more U.S. tech focused and a bit of a higher expense ratio. And then you have AIQ, which has the highest expense ratio, but they have companies outside of the United States, which is probably what lends to the higher expense ratio, in my opinion. Okay, so this is the last fund that I'm going to cover, and that is the yieldmax AI and tech portfolio option income. Okay, this is if you want to make some dividend income on technology stocks, right? This is going to write cover call options for you. You won't have to do anything about it. Yieldmax has actually been gaining a lot of popularity, especially with a couple of their cover call ETFs. One being MSTY, which is a cover call option ETF for MSTR, which is MicroStrategy. But let's take a look at this one. This one is fairly new, okay? I think it came out within the last month or so. So again, you're not going to have any of this information yet. All right, but GPTY is an actively managed ETF that seeks current income and capital appreciation via direct investments in a select portfolio of AI and tech companies. GPTY aims to distribute such income on a weekly basis. All right, as we scroll down the fund overview, GPTY is an actively managed ETF that seeks current income and capital appreciation via direct investments in a select portfolio of 15 to 30 AI and tech companies. All right, GPTY seeks to generate income primarily by writing or selling option contracts on some or all of its portfolio of AI and tech companies. So this fund, or this ETF, came out in January 22nd of 2025. So like I said, it's still fairly new. It only has about $15.66 million in assets under management. So not that much, in all honesty. Again, this is more on the higher risk side of things. It's probably on the more higher risk scale. I wouldn't put any money into this personally until this probably reached maybe the 100 million mark, in terms of, net fund assets, because I want to make sure that if I want to get out of the ETF, if I want to sell out of the ETF, that I'm able to do so. I don't want to run into a liquidity crunch where the ETF can't cash me out and basically I lose my entire investment. So again, you have to keep that in mind. This does have the highest expense ratio at a whopping 99 basis points, basically almost a percentage point. This compared to Global X's, artificial intelligence and technology ETF AIQ, which is at 0.68%. All right, so this is even higher than that. Okay, so really quickly, let's just take a look at the top 10 holdings. We have C3.ai Inc. We have NVIDIA. We have Apple, Tesla, AMD, Broadcom, and then, a couple other funds in here. So it looks like they have IBM in here. They have Salesforce. This price strikes me as like maybe some type of bond or something, some type of treasury fund. So I'm not quite sure what this is. But I do have a full listing of all of the holdings that this ETF does hold. So we see it has Apple, the AI C3, AMD, Amazon, Broadcom, Google, IBM, Intel, Meta, Marvell, Microsoft, ServiceNow, NVIDIA, Oracle, Palantir, Qualcomm. It looks like it has QQQ, which tracks the NASDAQ 100, right? QQQ is a index ETF. They have Snow. Actually, Snow, I think, is or it might be Snow Analytics. So Snow Analytics. You have Tesla and then Taiwan Semiconductors. All right. So huge amount of holdings in this ETF. But again, this is more for option income. You're probably not going to get too much growth out of this, to be perfectly honest. But again, time will tell based on how this fund performs. But, this is, again, still a very, very, very new fund. But, yep, that'll pretty much do it for this video, guys. AI is coming. AI is going to be the wave. If you want to invest, if you want to make a prudent decision in investing, I would highly consider investing into an AI ETF versus investing into single individual stocks. And the reason is because if you're going to invest in single individual stocks, you're going to have to make sure you research them, understand them, and you're going to have to keep track of them. Whereas with an ETF, they're going to pick everything for you and they're going to kick out the losers and replace them with newer companies, right? So you don't even have to worry about anything. You don't have to worry about managing it or nothing. These are all passive investments with the exception of GPTY from yieldmax, which I would probably keep an eye on just to make sure, nothing bad happens to it. I hope you guys got a lot of value out of this video. Please let me know down below in the description if you would consider any of these AI ETFs, or if there's an AI ETF that you are investing in that I didn't cover. All right, I have nothing else for you guys. I hope you guys like this video. I will see you guys in the next one.